Thank you for joining me for a look back at the Roaring '20s and a look ahead at what will be the Roaring '20s. Now, remember the 1920s roared in the stock market before the crash. The Dow gained about 500% over 8 years. That's a once-in-a-lifetime return. And as you know, there's a strong probability we are set up for similar returns in the next decade. What many investors remember about the 20s is the crash. And what I want to highlight in this video is the crash was not a bolt out of the blue. A bolt out of the blue is a term used in the military to describe an attack no one saw coming. Well, smart traders saw the crash coming. And what I'm highlighting here is two indicators that I use, peak velocity and VIX flip. And what I want them to do is confirm each other. And they did that, as you see by the blue dashed line near the top. For now, both of these indicators are bullish. And that's telling us we probably aren't facing the risk of a crash right now. As you can see, these indicators did warn of potential weakness here in the end of last year. They move in and out of the market depending upon the potential returns available. I want to share with you the formula for the VIX flip in particular, because this one's an easy one. For peak velocity, it's a little bit more complex, but all you need is about a month's worth of data, 22 time periods in the stock market being the number of days in an average trading month. And then you put a 26-period moving average on it, and you can generate buy and sell signals based upon the relationship of the indicator to the moving average, just like you do with price. Now, that could be a lot of work. So I want to assure you, popular indicators that are readily available can work well. You'll need to tweak it just a little bit, but that's easy to do. So here's MACD at the bottom of the chart. Again, we're looking at the Dow 1929. And here's a stochastics. Calculate it with the typical values. Now, the only change on the chart here between what you normally see is the stochastics. A lot of people put lines at 80 and 20, indicating above 80, you're looking for a sell signal because the market's gone too far too fast. Well, that's nonsense. As you can see, stochastics gets high and stays high. So rather than look at 80-20, just look at 50. If stochastics is above 50, you're generally in a bullish market. When it's below 50, you have weakness. Combine that with MACD. This is a weekly chart. So here MACD turned bearish, and when both stochastics lines drop below 50, you have your sell signal. Ignore the indicators when they conflict with each other. When one is bullish, one is bearish, just ignore it. You're on the previous signal. You're only taking signals when both agree. So here, near the bottom, you get a new buy signal. You always have a signal that way, so you know whether to be bullish or bearish. Right now, both of these indicators are weak, but they're not warning of a bear market just yet. See how we have one of the lines in the stochastic well above 50. So until we get the signals, it's a bull market. And that's very important to remember. But as you see here, going back on the chart, this indicator system does work to get you out of weak periods of the market, and then it gets you back in. In this case, when MACD turned bearish, stochastics said ignore it, and you would have enjoyed those gains in 2017 without being worried about a market crash. So that's what to watch for in the 2020s. Follow momentum indicators. Just find your favorites, look at what they did in the 20s, make sure it worked, walk through some other charts, make sure it held up over time, and then trust it. Don't override your signals. Emotional decisions are a trader's and investor's worst nightmare. It can take years to recover from an emotional decision that takes just a few seconds to make. We have a decade ahead of us that could be one of the best markets of all time. I urge you to follow it, and I also urge you to think about subscribing to my YouTube channel if you think slides like this have any value. So I hope you'll subscribe, and I'll be back with more information like this in the future.